You're now tuned in to the Desire to Trade podcast, a show where we bring you the best figures of the trading world and teach you how you can become a successful trader. This is your host, Etienne Crete.
Alright guys, today I'm with Shaun Overton. He's the guy behind the website One Step Removed, and I'm pretty happy to have him here. I think if everything is working fine, we're going to have the video for this interview, so you can check this out on YouTube. But what's up, Shaun? How are you doing?
I'm doing well. How are you?
Cool, very good, thank you. The first question is always, what is one quote that inspires you?
If you're not measuring, you're guessing.
I guess that's related to what you're doing, right? So tell us exactly what you're doing.
That's all I do. As empirical, I need to have everything defined, mechanical, running on a system. Otherwise, I don't have anywhere near the confidence to trade and sit in the market. I have to know that I have an edge.
Nice. So the reason why I brought you in the podcast is because you're doing automated trading, right? You're focusing on things that are programmed and automated. So tell us a little bit what you're doing these days.
Mainly strategy research. So I have my algos up and running, but my usual day, aside from checking my positions every once in a while, is mainly just research. So I have a huge backlog of ideas that I'm interested in analyzing, and I work in a statistical program called R and just code and look and see if I see something encouraging and then throw it out and and then just keep churning through stuff until I find something I like.
Nice. So how did you get into trading exactly?
I started as a broker at FXCM. So my background as a quant is extremely unlikely. I studied Arabic at college, and Arabic got me a job as a broker at FXCM because nobody could talk to the Arab clients except me.
Okay.
And then at FXCM, that got me, I led the sales effort for the sentiment fund, and this was a fully automated strategy. And I got really interested in what is this automated strategy? How does it work? How do you prove it? And I got to work with their systems desk I didn't get to actually do the research, but I at least got to talk to them about what they did for the research. And then I went home and I was programming my own ideas for 20 hours a week on top of my full-time broker job, and eventually quit being a broker and started being a programmer and was able to slowly build that up to where I was having my own ideas and finding stuff that actually works.
Nice. So you were able to transition to full-time trading after, from not having any job and just trading full-time, right?
Yeah, I mean, I certainly didn't leave as a broker and jump into full-time trading. I left and started a programming business that allowed me to be in the trading environment. We were building strategies for clients, and then it was really after 7 or 8 years of doing that where I felt like I had the knowledge and the expertise to build my own stuff and trade my own money.
Mm-hmm. So how was the learning process to learn how to program stuff?
Programming is actually not that bad. I'm extremely analytical, so I was able to just buy books for free or from the library or buy them off Amazon and teach myself. And nowadays it's even easier. You can get on Code Academy or Coursera and learn for free, and you're learning from amazing teachers. So the actual programming bit is a pretty low hurdle. I think most people are able to do it. Even if your math skills aren't really up to speed, you can catch up to basic programming pretty quick. But the challenging part, obviously, is the analysis of the markets. It takes a long time to develop a methodology for learning what a good strategy even looks like, how to decipher whether something is just lucky or is actually good. And that was far and away the biggest part of the learning process, was trying to get rid of all the junk so that because your time is limited. You can only look at so many things. So you got to know when to cut bait and move on.
And how long did that take for you to get your first profitable trading strategy, let's say?
That was back in 2013. So it took me about 7 years.
Okay. 7 years of intense work, or just? No,
off and on. The way I was, I guess, making my living was programming strategies for other people. But and honestly, most people think that's a huge edge, right? You get to see what other people think. It wasn't. It was just a way to function and be involved in this space. But most people's ideas are not very well considered. So that didn't really help me in my journey. It was more just having a reason to be involved with the markets and having an excuse to look that gave me the process to where whenever I would have a couple hours to spare, then I would evaluate this strategy idea and then largely have to throw it away and go through the process of iterating through it. So it was definitely not a full-time endeavor, but it was a consistent one. So whenever I was starting out, maybe I would only look at a strategy a month, whereas now I look at strategies every day.
Did you ever came through like mistakes or failures or any roadblock you had while building the strategy?
They're countless.
Okay, so tell us about one, like the biggest one then.
Okay, my favorite because it's the most painful, but it's kind of funny, was I had a client in Ireland, and I actually invested in his company because we developed this neural network that took some proprietary inputs, and then we built the neural network was supposed to be the strategy. Well, we developed the neural network. Everything looks great. I've invested in this business. I moved to Ireland to help push it forward. And literally the week before we moved to Ireland, the neural network just doesn't trade. So we've built this really complex code on an open source framework that all together is something like 250,000 lines of code. And it worked in the historical tests, and it worked live for a couple weeks, and then just stopped trading. And the question was, well, why did it stop trading? I don't know. It's 250,000 lines of code. How am I going to find out? So that was just one great reason of the things that can go wrong, especially if you try to get cutting edge and you want to do something really unique and different. That's why I'm very averse to machine learning, at least in terms of depending entirely on it, because when stuff breaks, you have absolutely no idea what's broken. You just know it's broken and you can't fix it. That's very frustrating.
Mm-hmm. Now let's go back to today and tell us a little bit what your strategy looks like. Is it like not necessarily specific, but is it like scalping or is it more longer term?
I don't have a strategy. I have a suite of strategies. So the most prominent strategy I trade is Dominari, which is really active. It depends on the portfolio selection, but for every currency pair in the portfolio, I do about a trade to 2 trades a day. Mm-hmm. And right now I trade a USD portfolio with the 7 majors. So I do about 10 trades a day is probably the realistic average. And then there's another strategy I've got in the pipeline that I haven't named, but it uses the signal to noise ratio, and it is more of it's more of a long-term position system. So I'm still working on the tweak. That's what I've been doing for the last 2 weeks, is trying to get it from being a hypothetical thing to, okay, I need to dial down. And it's a long process. It's when you find the idea, you get really excited and think, man, I'm almost there. But I know from experience that it takes a couple of weeks before you kind of get dialed in, and then it's a couple more weeks before you get more dialed in, and it'll probably be another 3 or 4 months before I'm ever actually able to trade it. But so I don't really have a set style. I just go where the research leads me.
Mm-hmm. And what kind of pattern do you look for when you trade? Is it like price action, or is it something completely different?
It could be anything. All I care about is data that predicts the market at some period in the future. Okay. So with Dominari, the example I give everybody is the SB score. It's the key indicator I rely on, and that is the relationship of one bar, the high, low, and the close. So if you have the close at the low, you get a score of 0, and you have the close at the high, you get a score of 1. And then if it's somewhere in the middle, it's something between 0 and 1. Well, that is really predictive of what happens 1 bar later, whether it's a 5-minute bar or a daily bar. Okay. And it's 90% correlated with the mean average return. So I use that to predict what the next bar is likely to do. I add in a couple other indicators, teach myself how do these things interact with one another, and then hopefully end up with a strategy at the end.
Interesting. And what can be like the win rate of a strategy like that? Usually,
mine's 69%.
69. Okay, that's pretty good though. Pretty good. And do you how do you take profit on those strategies? Is it like bigger move, or is it really like scalping short term usually?
It's shorter term, but
Mhm.
shorter term being a couple hours. I don't
Okay.
scalp where I'm in the market for a couple minutes. My shortest holding time will be probably an hour to an hour and a half.
Hmm.
But I'm out of my trades almost every single day.
Hmm. And how do you ensure that you don't lose too much money on that trade?
I have catastrophic stops, but generally I like having market-based exit criteria.
Hmm.
So I make sure that I don't get completely blown out of the water, that if there's a Swiss franc type of event that I'm going to live, but I'm willing to accept larger losses in a given time frame because in the long run, those having those extremely wide stops actually improves the performance. So I just make sure that there's no fatal outcomes,
Hmm.
but
Hmm.
even if they're really painful, I'm willing to tolerate them.
Yeah, so you don't want to blow up your full account, but you're ready to tolerate losses. Yeah. Yeah,
Yes,
that makes
exactly.
sense. Good. So what I think a lot of people are wondering about is like, what's the process to go from like nothing to having a strategy that you program? Is there like a
Yeah,
specific pathway you have to go through, or?
it's a very specific methodology, and
Okay.
that's why it took me so long to get to the point where I could develop strategies. And it's when we do program strategies for clients, I always recommend that they do this, and they never do. But you can save a lot of time and money if you prove that your idea has some sort of correlation with future performance. So to give you an idea, one video I did was the RSI doesn't work, and I
Hmm.
ruffle a lot of feathers saying that, but it's true. And the way I analyze the idea is I look at the RSI, so it's going to be a number between 0 and 100.
Hmm.
And then I look at how much does the price change on average when you have a given value. So let's say that the RSI is 5, 7, and 8, and that all falls in the value between 0 to 10.
Hmm.
Then I say, okay, what was the average return one bar later when the RSI was 5? What was the average return what was the return when the RSI was 7? What was the return when the RSI was 8? You average those together and you get a number. And there should be a very strong correlation, more than 50%, between the observed indicator value and the average return for that indicator.
Hmm.
So if you have like the SB score, if the SB score is 0, the mean return will be something like this and very positive. And then if it's 25 to 50%, it'll be slightly positive. And if it's 50 to 75%, it's slightly negative. And if it's 75 to 100%, it's really negative. It's a
Hmm.
straight line. It's negative 90% correlated. It's a mathematical relationship, and it's very obvious. You don't even have to have a math background to look at it and say, yeah, that predicts, because you can see a straight line.
Hmm.
So when I did the RSI analysis, you want to find some kind of regular correlation. And what I found was that if you change the instrument that you look at, you change the correlation. So what I did in that video was I looked at the dollar yen, which was in a monster trend at the time, and everything came out positive. The RSI just predicted it predicted that the market was going to go up. But then if I looked at a range trading pair, then the RSI would predict range trading type outcomes.
Hmm.
And what that indicates is that the RSI is not predicting anything. It's reflecting what the market's doing, right? So it
Hmm.
doesn't have predictive value. It has reflective value. And that has merit for people that are trading manually. If you're a range trader and you like to use the RSI, then maybe you're learning something about what the RSI tells you in a ranging environment. But for a quantitative trader, that is not predicting anything. And for me, I just throw it out and I move on to the next indicator, or anything that can be quantified is something that I can look at with that relationship between observed value and return at some point in the future.
Hmm. Hmm. And once you have that specific relationship, what do you do after?
You try to find more like
Okay.
that.
Okay.
So yeah, you're not going to find a holy grail indicator.
Uh-huh.
None of them are going to just predict the market and you have one indicator and you buy and sell with that one indicator. It just doesn't happen.
Hmm.
But you combine indicators. So by doing this process continually, I've built up a library of, okay, I know this predicts the market in this way, this predicts the market in this way. So when you find a new idea and you think it's going to be a solid foundation for a strategy, you you mix and match and you say, okay, let's look at the combination with these things are paired together. and these things are paired together, and these things are paired together. And you just slog through it, looking through all of these different relationships until you find something that has an edge that is substantially greater than the trading cost.
Mm-hmm.
But even then, that's only half the battle, because that's just your entry strategy.
Okay.
So then you have to worry about how does this pair with when you're going to exit. And it's not always black and white, and it's not always, sometimes it's even different indicators. So some of it is scientific, where you're using math and correlations and looking at how these intersected sets relate with one another. But you also have to have a good understanding of what these things mean intuitively, so that you know how to mix and match the indicators to build the strategy.
Mm-hmm. Mm-hmm. So then I guess once you have all that prepared, you have to test it, right? Because I feel like people think they can just program something and then use it, but you probably go through like a long process of testing everything and like measuring everything. So what's that process exactly?
You measure in sample and out of sample. So the best way to avoid building a junk strategy is to look at to measure the correlation of your predictive indicator with a set period of time. So it's 2016 now. Maybe you look from 2013 to 2014 and you find the correlation over that time frame, and maybe it's negative 70%. And then, which is great because it's the absolute value is more than 50%. That's kind of my threshold. So then you say, all right, now if I move out of sample, do I get the same kind of behavior? And if I look from 2014 to 2015, if I get a correlation that goes from negative 70% to negative 40, that's a big jump. That would be the alarm bells are ringing in my head saying this isn't stable in the long run. But if I move out of sample and the correlation's negative 75, it's fine.
Mm-hmm.
So by doing that, and then by doing it on multiple instruments, you want to see stability in the correlation. It's not most people, when they're doing strategy development, they have their head buried in the equity curve. And the equity curve is always subject to random chance. You can build a strategy that buys when a coin comes up heads and sell when a coin comes up tails. And if you push the trade button often enough, you'll come up with equity curves that go in a straight line from the lower left to the upper right. So you can't rely on the equity curve to tell you whether or not this is a good strategy. And what I like about the correlation is that it's a black and white number, in sample, out of sample. I can measure with confidence intervals and all these statistical measures to tell me that, yes, this is stable, or no, this is unstable. And if it's unstable, out it goes. Don't get married to the idea. Move on to the next one.
Interesting. And I feel like then even after that, you have to try it on a demo account, right?
It depends. It depends on what you're worried about. I do demo testing, not for strategy performance, just for code evaluation, because I don't see any merit in demo testing my live strategy, because the execution is not going to reflect what's going to happen in the real account. So for me, it's just making sure that the code's not going to go bonkers. And I can do most of that testing in a back testing environment just to make sure that it's not going to run off the rails. Put it on a demo account for a couple of days. And then when I really start my testing, I start with a small amount of money. So if I trade with $1,000 or $2,000, then that's my code testing / strategy testing environment. And then whenever I'm happy with it, then I start kicking up the balance.
And do you ever trade manually at any point, or you never touch any manual trade? Okay.
No, the only manual trade I'll do is to shut off portions of the portfolio. So when all the Swiss franc chaos happened, I changed my portfolio. I happens to be flat on all the franc crosses at the time, but and for whatever reason, I was awake at 2 a.m. That's not normal, but as I saw that happening, I thought, yeah, this is a bad idea. So I just switched that part of the portfolio off. But in no way am I in there. I think that's going to win. I'm closing the trade. I'm totally hands off.
And yeah, okay, makes sense. Now, what is the process you follow to put your strategies to on and off? Because I guess you don't like leave your robot open all the time, right?
Oh, I do. It's on 24/7.
24/7, and you never change anything from that, or?
Very rarely, unless I've gone through there are times where I learn something from watching the strategy, and then I go back and re-research it and I make some tweaks. So then I'll just update the code. But that's it. It almost never goes offline.
Okay. And what is the process to monitor your strategies? Do you look at them like every month or something?
It depends on the strategy. So Dominari I look at once or twice a day just to see what the positions are and how I've done. But that's built on extremely robust code. I've been coding strategies for 10 years, so I know that I don't have to worry about it going night trading style and losing the account in a couple hours. Some of the strategies are lower frequency. So QB Pro is the other strategy I've traded for a while, and that one this is a feature I don't like. I have to manually select the portfolio, and I do keep tabs on how it's doing, but that I do less frequently. I do maybe every 2 weeks to 4 weeks just to decide whether I've selected the right portfolio or not. There's no point in me switching the portfolio every day. I'm just going to waste a lot of time. But by updating the portfolio once a month or once every 2 months, it keeps everything relevant and fresh, but it's not it's hardly a time consuming process. I just flip through some charts and I know what I'm looking for, but that takes me about 30 minutes a month.
Mm-hmm. Okay, which is pretty good. And what do you do from like the other time in the month? Like what?
It's all research. So QB Pro isn't strategy that I want to stick with in the long run. It has some weaknesses that I don't like. So I've got Dominari, and that's the one that I expect to do much better in the long run, and I'm putting a lot more money behind it because I'm a lot more confident. So I am doing Dominari, trying to get that up to speed, but it has strengths and weaknesses as well. So I know what those weaknesses are, and I want to counter that by having a long-term strategy. So that's what I'm currently developing while I'm simultaneously pushing Dominari out from research mode into full production.
Cool. What are the main mistake you see people trying to creating a strategy make?
They don't follow the methodology of looking for the stability and the correlation between future returns and the predictive value. They build the strategy on the assumption that their indicators have predictive value. But I can tell you that the vast majority of the indicators they're using have no predictive value. So they're largely wasting their time and their money.
Okay. And what are some like one or two things other than indicators that you could try to predict the price with or the change with?
Well, I mean, that's really it. There's price action and there's indicators.
Okay.
You can have other data sources that are more complex. You can do natural language processing where you're scraping Twitter looking for mentions of the euro US dollar, and then you use that to predict the market. I went to a talk a couple of weeks ago for an R users group where this guy that's an employee at IBM, you can use Watson for free, which is pretty cool. The same thing that they use to beat Jeopardy. You can use up to 1,000 API calls a day, and you can use it to scrape the internet looking for articles that relate to the dollar yen, and then it'll give you a confidence score with what the sentiment of these articles are, and then you can synthesize them into some kind of prediction. It's on my to-do list, but I've got easier ideas to look at before I go do that.
Okay. But that's really interesting, like taking factors outside of like trading maybe, or you probably have like many things you can try.
Any kind of data that you could qualitatively say, that should have some kind of predictive value, or it would make sense for it to at least have some predictive value in the market, then you can take that and turn it into a time series and see if it actually predicts the market or not. But ultimately, if it goes in a number, then it's really an indicator, whether it's price action or an indicator or Watson. And you put it into that process and analyze the correlations and then mix and match to build a strategy.
And what kind of sample size do you look for when you want to test something?
I want to see at least 100 observations per instrument when I'm doing the correlation analysis. Okay. So I'm not looking at the total number of trades. I'm just making sure that the correlation is valid, because sometimes indicators don't have bounded values between 0 and 1. Some of them go off to infinity. And what you can find is that you'll have 10,000 observations near the middle, and by the time you get to the tail, you have 3 observations. And it's not fair to compare the 10,000 observations to the 3. So you need to either throw those outliers out, or you need to build a bigger sample size.
Mm-hmm. I guess two of the questions that are gonna come up for sure about that is like regarding the tool you use. So how do you get the data exactly to analyze?
A lot of times I just export it from the broker. So
Okay.
I'm not doing any kind of scalping where I am critically dependent on having accurate tick data or accurate 1-minute data. But if I go in MetaTrader and I go to File, Save As, and I export the 1-hour trading history, it reflects what they were actually showing, and that data tends to be dependable. So when I analyze my idea, I export the data from my broker, and then I pull it into R, which is a statistical research package, and then I do my analysis there.
And you would calculate the RSI or any indicator manually, like through Excel or something?
R has packages where you can use the most common trading indicators like RSI, stochastics.
Okay.
It's called quant mod. You can install the package, and then now you can use RSI and whatever you want. But most of the time, my indicator ideas that I'm researching are proprietary. I like knowing that something that I'm doing is different. I don't want to be using the same thing that everybody else is.
Yeah, it makes sense, definitely. Yeah. And what kind of broker do you use? Do you need any special broker, or is it any broker you can find online to trade?
Any reputable retail forex broker.
Okay.
So commissions are really important, and most people think the difference between paying a pip and a pip and a half isn't a big deal. It's a big deal. The only things that I care about when I'm picking a broker is the broker going to send my money back when I ask for it? Are they a good custodian of my money? Like, are they likely to go bankrupt? And then pricing. To me, brokers are a commodity. I don't care who they are. As long as they're reputable people and they give me the best price possible, that's all I care about. So right now I trade at FXCM and Pepperstone. They're a good fit for me. Their commissions are as low as you're likely to get in a retail environment, so that's where I go. But if I could get lower commissions, I'd switch brokers tomorrow.
Okay. Interesting. I think, yeah, it's something people don't really think about, and even myself, I don't really think about the commission that much. But yeah, it definitely makes a difference, like over time, I guess.
Yeah, most people are trying to make if you talk to more institutional traders, they'll quote their profit per million notional traded, and they're trying to make $15 to $25 for every $1 million notional traded. But when you're a retail trader and you're paying, if you're getting a good deal, you're paying $70 round turn per million notional traded, right? You've got to make something like $85 to $100 round turn notional to make a reasonable profit. And that's a very, very high barrier. And the only reason that it's that high is because most retail traders just don't do we don't do the volume to get access to the good pricing. And it makes the strategy research infinitely more difficult, and it ties your hands. We can't compete on the scalping super high frequency level. Our stuff has to be longer term because that's where the commissions and the spreads push us. That's the only place where you realistically have an edge.
Interesting. And do you value more brokers that offer like a fixed commission, like a fixed dollar commission versus a pip amount, or?
Absolutely. I always prefer trading on raw spreads with a commission because of two reasons. One, I actually know what I'm paying the broker, and I like the transparency. But the second is, if you are executing a strategy, when the broker marks up the spreads, it changes your execution. So say that you're trading a currency pair that trades at 100 and you set your take profit at 105. Well, if the real market goes and you buy, if the real market goes to, let's say the real market's 105 at 106. So bid and ask, and the broker marks up their spread by widening the bid. Well, now the price that you see on your screen is 106 at 104, but your take profit's at 105. If you would have just paid the broker your commission, and you could have got executed at a profit at 105. But because it's embedded in the spread, you now still have an open trade. And that means your trade's open longer and you're subject to more risk for the same amount of money.
It's interesting. It's something, something interesting though. I guess it's different for traders who are more manual, but I guess in your case, you really have to think about it. Yeah, so that's a good point. So tell us about, go ahead.
Even for manual traders, they should be trading on commissions with raw spreads, because if you have your take profit set, it affects you the same way it affects me. And you're just like I said, maybe your trade is only open for an extra 2 seconds, but there will be times where your trade, where I get it filled and I exit my trade at the exact same take profit level and you don't. And what happens to your trade thereafter? A winner becomes a loser.
Yeah, that's true. And that reminds me that we had a guest on the podcast and he was talking about that exactly. He was suggesting the one with commission. Yeah, that's true. So tell us about what you're doing these days at One Step Removed. Like, what exactly do you work on?
It's all strategy research. So my career goals are to work with a proprietary trading firm, but that requires a longer track record. So I am kind of in a holding pattern where I research ideas. I publish a lot of stuff on my blog. So I have a lot of retail traders that are interested in doing what I do. And I give them tips and advice for how to follow in my footsteps. And then occasionally I have an idea that I spin out and I turn into an indicator that people can purchase. But for the most part, my day is spent researching strategies. I want to trade. I like trading. That's what I do. So I'm in more or less full-time research mode until I feel like I have 4 or 5 strategies that are solid. That's probably where I'm going to put my time. And even then, even if I had 4 or 5 strategies, I doubt I'm finished. You're never finished.
Yeah, okay. So it's kind of a passion, right? So
it is a passion. I love the data. I love the analysis. Having the strategies trade and interact in the markets is fun, but I get bigger kicks out of actually the research process than trading it. Trading is just the end goal. It's the excuse I give myself to do the research. But what I really like doing is the predictive modeling rather than watching the price in the markets tick up and down. That's not my. Okay. There's a reason I only look twice a day, because otherwise I find it very stressful.
Okay, that's interesting. So tell us how people can find you if they want to know more about what you're doing.
You can find me at www.onestepremoved.com.
Awesome. And I guess you're on social media as well and everything, so people can.
I'm on social media. You can find me at facebook.com/MetaTraderProgramming. That's the social media account I keep the most active.
Nice. Perfect. And so what's keeping you motivated for the future? Do you have you talked a little bit about your goals, but do you have anything other than that keeping you motivated?
You mean in general besides trading?
Yeah,
My family, my wife, my kids, my church. I wasn't expecting that, but yeah, I mean, I have a place here in my community, and I feel like I have a calling and a place here and things that I need to do and that I'm responsible for. Trading's a part of my life, but it certainly doesn't define who I am. I like trading, and even if I wasn't getting paid for this, I'd be doing it as a hobby. So that answer the question?
Yeah, that's definitely a good answer. Yeah, for sure. So I'm going to have one last question for you, Shaun. Before, I just want to remind the listeners that all the show notes are going to be on desiretrade.com. So people can check this out. We'll have the link to your website and all the things you talked about today. And the last question is this. This one's pretty tricky. But if you could give only one sentence of advice on how people can thrive as traders or automated trader, what would that one piece of advice be?
The piece of advice, if somebody wants to be an automated trader?
Yeah.
I'll just keep this appropriate to the novice. You have to learn how to code. You're not going to be able to figure it out. You need to find some kind of way to operate so you can bang through ideas, because there's there's too much work to do to try to outsource all of it. It's fine if you have one idea and you want to look, but for somebody that's serious about learning, or serious about doing it, you have to know how to program.
And what would be like the single action they should take this week? Like, what would be the resource to check out for that?
Coursera or Code Academy.
Cool. Well, Shaun, thanks for being on the podcast. It's been a pleasure to have you here. Been a pleasure to learn a lot. I think I have a couple of notes, so it's going to be great. And for our listeners, I'll see you in the next episode. Ciao.